Hey everyone, it's Leo with Integrity Dream Home powered by EXP Realty. I am excited to meet with you all today to talk about homeownership. Keep you guys in the loop with what's going on in today's market. When it comes to subjects like interest rate and inventory, these are the thing everyone's talking about. So we want to get ahead of the curve, in regards to this interest rate and have some of these conversations with you guys. A lot of times when I meet with clients, what sticks out to me most is how much education that we can actually provide. Like what is a loan officer? What do they do? What's the difference between a pre-approval and getting pre-qualified? When it comes to inspection, like what are the most common things that we should look for in an inspection? And then title company, there, what is a title company? What do they do? Where is a title company? What do we do there? And so, over the next couple months, I'm going to be conducting some interviews. First, starting out today with Kelly. We have Kelly Overgard, who is our special guest. I'm so excited. Kelly has been so fantastic to partner with. And, I get so many great reviews from my clients who I send her way. And so it's just been awesome connecting with her and partnering with her. And so she is just a wealth of knowledge. Kelly has been doing it for 35 years. She knows what she's doing. She knows what she's talking about. And so I'm excited to have her. And it'll be every 17 days. So our next guest will be Ruben, who is the owner of Structure Tech Inspection Companies. They do home inspections at a high level. They have a very good reputation in the community. I think they have over 2,000 five-star Google reviews on their Google portfolio. They just do a really good job. And so I love referring all of my clients to them. So we're going to meet with Ruben, the owner of Structure Tech, to kind of go through some things that you can look out for in inspections. And then finally, in this series, we're going to be talking with Michael with Edgewater Title. And Michael is going to explain like who they are, what they do. A lot of times when I meet with clients, they'll, when it's time to introduce them to a title company because it's part of the home buying process, they've yet to even hear about a title company or what they do or how to what is their part in the process. And so I want to educate people up front. I want to give you guys as much knowledge and education so you can have a clear understanding of what the process is for home ownership, but also provide you with relevant content in today's market. So without further ado, I am going to have Kelly introduce herself and say hello. Welcome, Kelly.
Well, all
There you
right.
are.
Sorry.
Hey,
Okay, well, we just proved what age I am. I am of the age before the technology.
you're good. You're good. No
So I might
problem.
have 35 years of experience in mortgage, but zero in technology. So don't let that be the judge of me.
You're doing
But
great.
so I am Kelly Overgard, as Leo said, with Kevnik Morgage. Been in mortgage 35 years, and I'm super excited to help Leo launch this today and answer any kind of questions that he and his viewers have. So I'm excited to get started.
Awesome. Well, I'm super excited to have you, and we can just jump right in. So the first question that I have for you is, our topic today is, changing your story with the rising interest rates. And so, you know, with that being said, the million dollar question right now is, what are the current interest rates?
I love that you are doing an interview on this because it is on the top of everybody's mind. And what I'm here to explain is that the interest rates, although they're extremely important, it's the relationship that you have with Leo as your realtor and with your lender that is more important. Interest rates are cyclical, so they go up and down. I purchased my first home at 14% and was excited to refinance at 10.5%. So the interest rates will change. What's most important is that you are working with the payment that you can qualify for and the purchase price that matches up to. So whether or not the interest rates are in the threes, the fours, the fives, whatever it may be, it's working closely with you and I to make sure that we're adjusting the payment and the purchase price accordingly. And one of the things that's really good to know is interest rates are cyclical, like I had said. So getting into your home now, what we will do is you're stuck with us. You're going to have a realtor and a lender for life. And we're going to do at a minimum an annual review. And during that review, we'll take a look at the interest rates and see if it makes sense for you to either refinance if you're going to stay in the home and get a lower rate, or maybe you have more equity and we can look at removing your private mortgage insurance, your PMI. So really, the question that we get a lot for the interest rate is, let's dig deeper and let's figure out what you can afford, what the program is that works with it. Because the other thing is the interest rate, it varies depending on the programs. So do you have anything to add to that, Leo, or another question?
Yeah,
Yeah.
yeah, yeah. So thank you for sharing that. And so as I'm sitting back and I'm listening, you know, I can't help but feel you did answer my question, Kelly. What are the current interest rates?
So the current, and you're right, I did not answer it. And that is how I work with clients. Obviously it becomes important, but like I said, what is the payment? How does it impact it? So in this environment, the interest rates have gone up about 2% in the last couple months. And part of it is because the government was artificially suppressing, lowering those rates for us, and they can't sustain that. So we're now in a very normal market. Interest rates in general, are in the high fours. So I will generalize it for people because they ask. But what's more important, like I said, is what is the payment? What can you afford? And how do we adjust the price accordingly so that you actually set up the search for them correctly and they're searching in the proper price range? So does that help?
Yeah, absolutely. So it sounds like it's really situational, but at least you're able to give us kind of a general guideline of kind of where they're at right now. And
Mhm.
if I may just add anything to that, one of the things I my perspective is, when interest rates went down to 2%, three, I mean, we're talking historic lows, right? So
Mhm.
when it goes down to 3%, we're all like, oh my gosh, this is historic lows. Like, holy moly. And then we got down to 2%. We're like, oh my goodness, 2%, right?
Mhm.
And so now as it's starting to stabilize and come back to normal levels, we just want people to be careful, not to panic about it because it's
Mhm.
normal. They're really returning to normal levels.
Yep.
And and personally, even I'll throw myself under the bus. I'll use myself as an example. I when I bought my home right before the interest rates dropped to 3%, 4 3 2%, etc. And so, for me, having missed that boat or having just bought before, I don't have any buyer's remorse because what mattered most is when was the right time for me and where
Mhm.
I was at in my life, right? So there's no because people ask me all the time, like, when is the right time to buy? And that's the best way we can answer that is to say, when is the right time for you? Because
Mhm.
it's really going to differ with everybody and where you're at in your life. And so, now as we've kind of come out of the 2 3% and kind of normalized, I don't feel like I missed the boat. I don't feel like, because it's just where I was at the time when I was in a position to buy a home. So
Mhm. Well, and I'm so glad you said it that way, Leo, because one of the things I pride myself with our relationship is, for instance, I was just talking to one of our mutual clients last night, and we take the approach where truly, when is it the best time for you to buy? In their case, it's not interest rate sensitive, it's more let's create a plan to improve credit to get better pricing and put more money in the bank so that when you do make this purchase, that you're doing it safely and the best way that you possibly can. So I like what you're saying because you're right. It's individual, and quite honestly, having been in the industry 35 years, I can tell you with absolute certainty, people are going to buy at any interest rate. It just has to fit their needs and what they can afford.
Absolutely. That's nail on the head. Thank you so much for sharing that. And so I'd like to transition to our next point and, go to our next topic. And then,
Mhm.
I want to let everyone know that we're going to leave some time at the end. If there is any Q&A that anyone has, we're going to take the last 5 minutes to answer any questions. Maybe what's the difference between being pre-approved or and pre-qualified? Like, what are the differences? How do you know if your lender's a good lender or a bad lender? And not the person themselves, but just the thoroughness and how you can work with someone who works with values and integrity. And so we'll go through some Q&A at the end here. But going into our next topic, taking control of listing your home without fear. So the truth of the matter is we need listings, right? Like the inventory is super low. We need sellers and inventory to sell. And a lot of people are scared to sell right now because of how competitive it is. So partnering with you as their lender and me as the realtor, you know, uh, you know, how, how do we explain to them how we help them, navigate through these waters?
Mhm. Well, and that's a great topic because you are right. We need listings, we need houses on the market. And part of it is, and one of the reasons I love working with you is we want to meet with potential sellers as early in the process as possible. One of the things when you talk about taking control as a seller is let's put you right up front in the best position as possible. One of those things is to be able to write an offer on your next home non-contingent. And non-contingent means you don't have your current house to sell. So there's a couple ways that we can position that. We can actually talk about adding a second mortgage if you have a lot of equity. They're also known as home equity lines of credit or HELOC. There's also bridge loans. So there's a different options depending on what you can afford to actually tap into some of that equity up front before you list it. So one of the questions I get asked is how early in the process should I talk to my lender? As a seller, as a new buyer, you need to talk to us as soon as possible. And Leo, you do a great job sending them to us because one of the things, if they want to tap into their equity, they need to do that before the listing goes live in some of those cases. So that's when we can put a second mortgage or a HELOC in place, pull out, say, $100,000 of that equity to purchase that next home. A bridge loan can be done at virtually any time. And then another way to do it is right now, you have the ability to be creative. And when I say that, list your home with Leo, you get a signed purchase contract, and there's different things that Leo can help negotiate as a seller. Maybe it is a rent back where you're staying in the home until you find your next home. There's a lot of different options, but until you talk to us, you really don't know what they are. So do you have anything to add to that, Leo?
Yeah, absolutely. I mean, that is the first step ultimately is just reaching out and having a conversation about it and exploring what your options are. And we certainly want to, provide you with as much information as possible, no pressure, no hassle, no haggle. I mean, we're just here to answer your questions in hopes that, even if it's not right now, but when the time is right, maybe you'll keep us in mind. And so please always feel free that you can reach out to us and ask us any questions about that. Um, and yeah, so you mentioned the home equity line of credit, and then is there any other options in addition to that?
Yeah, I'm glad you asked. So one of the other options is, again, so you own your current home, you're afraid to list it yet. You have to purchase your next home non-contingent because it's such a hot seller's market right now. One of the other things you can do, if you can afford both payments and don't want to pull out that equity, maybe you don't qualify for that second mortgage or that HELOC. So what you can do is still list and sell your property, buy the next one, go non-contingent, and you buy it with a little down, like 5% down. Well, a lot of seasoned buyers don't actually want to pay what's called private mortgage insurance, and that you have to pay if you have less than 20% down. Well, one of the solutions that Leo and I work with you on is you've bought that new home with 5% down. Now you list your property, your current one with Leo. When you get that influx of $100,000, you're actually applying it to your new house, that new loan, and we're re-amortizing, recasting. There's a lot of terms for it, but basically you're applying that $100,000 as a prepayment onto your new loan, and we're adjusting the payment accordingly. So that's something that we can do right away. And that is another way to kind of navigate and take control in this market.
Absolutely. And that all makes sense. That's great. Especially with, I mean, having a purchase agreement subject to selling another house in this market is tough.
Mhm.
Trying to buy a house and then writing in the purchase agreement that you have a house to sell, in this market, it's very aggressive right now. And so to be able to put in an offer that is not contingent on the sale of a home definitely does help. So having these options to sell non-contingent is amazing. Thank you for sharing that.
Yeah,
Do you
and
have?
I
Yeah,
actually have one more example for you, Leo. So
awesome.
we have clients right now, and this is also a good example how Leo is your realtor for life. I'm your lender for life, because we have clients that are selling now to capitalize on that market because we need listings. We need properties to sell. They know this is not their forever home. So we actually have a plan in place where they're going to sell now, and they're not going to buy for a year. They're actually going to go out and rent. They're going to pay a high rent, but it's part of their plan. So they sell and list with Leo, they take that equity, they put it into savings, and a year from now, then they come back to us as a buyer. So that's an option too. There's nothing wrong with doing that. You don't always have to be in that home, especially if it's not your forever home. If it's not your forever home, why not look at taking advantage of the market and selling it and then buying down the road? So that's another thing that we're starting to see.
Absolutely, absolutely. Um, yeah, that's spot on. I'm actually doing a walkthrough later on today with someone who in that same situation of just, take advantage of the seller's
Mhm,
market and, regroup and then in a year or two, if that's what's more comfortable for you,
mhm,
then you can always explore purchasing your forever home at that point.
mhm.
Be smart about it. Keep the money set aside, stick to the plan, and execute it. So, absolutely, for sure. Thank you so much. Um, and so, just wanting to be respectful of everyone's time and keep this concise to the schedule, 30-minute. Um, I'm going to jump into some Q&A with you, and I'm going to take the honors of asking the first question.
Okay.
It sounds like we got some questions in the comments, but I'm going to get it kicked off with you. I want to provide some more knowledge and value to our audience here, and so my first question to you is, what is the difference between like being pre-approved and pre-qualified? What are those differences?
I am so glad you asked. So the first thing that I want to explain is the actual terms are used differently in the market. So we have to be really careful with that.
Mm.
So we do, as a team, as Kevnik Mortgage, we do an excellent job at making sure that our pre-approvals are solid. There are a lot of lenders out there. So it's, buyer beware. There's a lot of lenders out there that don't do a good job on the pre-approvals. So a client thinks they're pre-approved, they're listing their home, they're buying their next one. And because their lender didn't do the job that they needed to, they're having challenges. So I just want to explain that. So pre-qualified in our world, and what I believe it means to most people, is we've taken an application, we've pulled your credit, and based on the income and the assets that you've told us about, you are pre-qualified. So this is where you could shop, this is what you can afford. Now, the pre-approval is the next step because it takes that and then it documents everything. So we've actually collected your tax returns or your pay stubs, W-2s, your asset, your bank statements. And in this market, you should not and really cannot be shopping with less than a pre-approval. Don't you agree with that, Leo? It's so
Yeah.
competitive.
Yeah, 100%. I'm so glad you clarified that. And I was going to add that a lot of times, when I'm passing my clients to you to get the loan process going, I'm already planting seeds. We're jumping straight to the pre-approval in that
Mhm.
regard. I'm letting all my clients know it's really quite simple. It's a little overwhelming sometimes, kind of
Mhm.
gathering the documents. Some people might have to bug HR department, but a lot of times it's just filed at home,
Mhm.
having two tax statements of the last 2 years of income, your most recent check stub, and your most recent bank statement. So
Mhm.
having these three things, I mean, if you can gather them up, maybe take a day or two and have those ready when you submit the application, we're getting ourselves into a position to win. We're
Mhm.
getting and really, like you said, to compete in this market, I mean, you really can't go out and look at a home unless you have that pre-approval in place. You don't want to waste your time or the seller's time. But
Yep.
absolutely, we want to get pre-approved. And I actually have an example, if you don't mind, of a situation. Through working with you, I had a client who contacted me, said, "Hey, Leo, I want to buy a house. I'm working with a lender. This is our pre-approval." And or maybe it was a pre-qualified. Actually, I it was a pre-qualified because they didn't take the time to dig in and verify said documents. And so, we start home shopping and start looking at homes, and the lender just started getting really shaky. You couldn't get a hold of the lender. As a realtor, when my client has a home that he's interested in, I need to be able to get in touch with the lender. I needed to be able to get an updated, pre-approval letter, etc. And so, it just started getting really shaky. And, we looked at a few homes, put in an offer. Well, we did a fantastic job, got their offer accepted, get it 2 weeks into the deal, and find out that it shouldn't have been issued. That lender didn't do a thorough job in getting him pre-approved. And, and I had to inform the listing agent that, I apologize. They were very understanding, thankfully. And I said, I mentioned along the way a few times, I said, "Hey, man, if you're not getting the service you deserve, please consider my team. Kelly is amazing. She does a thorough job up front. And, let's explore that." So finally he says, "All right, let's explore it." You took a look at it and you were like, "This is going to be a Hail Mary." I'm not sure what that other lender was thinking, but this is going to be a Hail Mary. In football terms, that's go long. And
Yep.
so we explored it, and yeah, it was unfortunate news that we had to break to them, but they were very appreciative and understanding of what we were explaining to them, and really
Mhm.
just relieved that they had a team that was thorough enough to double check everything and make sure, and that's just a testament of, you know why you want to choose a good lender.
Mhm.
And so naturally, when I get clients that have their own lender, I get a little hesitant with them. But I'm just really, really glad I have such a solid team in my corner that can help them, in these situations.
Yeah, that was actually a good explanation because that reinforces what I said. There's a lot of lenders out in the market that are not doing what they should. So, and it does make a difference. And then those buyers, the impact to the buyers, it's okay to tell buyers no, that they don't qualify, that these are the steps that they need to become a successful homeowner. They rather hear that than get a house and offer accepted and then have it fall apart. So I'm glad you used that example.
Absolutely. Well, let's go to some of the questions in our comments. Here's a good one. Can you guys touch on the rising rents and how this impacts the decision to purchase?
Do you want to take that one or do you want me
Uh,
to?
yeah, you can. Go ahead.
Okay, absolutely. So rents. So when we have an affordable housing crisis, which we are in, we do not have enough affordable homes to buy. That also then goes into an affordable rental crisis. So we do not have enough affordable rentals. So when Kevin asks, how does that impact the decision to purchase? It actually, sometimes pushes people into the market of buying, because if you're paying $2,000, like I'll get this question, you're paying $2,000 a month in rent, they don't necessarily want to enter the competitive sellers market, hot sellers market, because they don't want to overpay for a property. Well, one of the conversations that I have is, okay, there's overpaying, there's being smart, there's working with Leo to come up with the correct price point. But if you don't buy now, you're putting $24,000 into the hands of a landlord versus your own equity in the next 12 months. So the rising rents definitely, will help people make the decision. I'm tired of paying rent. I have one of your clients right now that's paying $1,500 a month and the rent is going up because we are in this crisis. There's not enough rentals. So they're like, we weren't going to look for a year or two, but with our rent going up, we can definitely own something nice in the Twin Cities for $2,000 a month. So it definitely makes an impact. Good question, Kevin.
Yeah. And just to add to that, for people who, are hesitant to purchase a home because of where the buying market is at, when you in contrast with where the rental market is at, that could be your sign that it is the time to buy a home, especially with rents raising so much. I mean, let that be your sign of, hey, let's jump into home ownership as soon as we can before
Yeah.
this gets any more further up, and start having our dollars matter, start having our dollars
Mm-hmm.
investing into something. 30 years, 15, 30 years down the line, you've got an asset, you've got
Mm-hmm.
equity in it, you haven't wasted it on rent. So I would just encourage people not to waste any more time with that. Take this as your sign of, like, get out of renting and get into home ownership. It's never going to be a perfect scenario, but really it's
Mm-hmm.
like, when is it right for you? So that's what it kind of brings me back to. Well, as we close here, we're at the 30-minute mark. I want to be conscious of everyone's time. Do you have anything else that you'd like to add or leave with folks?
Yeah, absolutely. I guess my closing thoughts are, there's so much negativity in the news about other things and also about the rising rates, the hot sellers market, things like that. Turn that noise off. Give Leo a call, give myself a call, and learn what you can really afford and take that negativity and create some excitement. Owning a home is still one of the best American dreams ever. And 35 years in the business, I'm telling you, it is just one of the best things that I get to do every single day, is work with homeowners and have that come true. So I encourage you, no matter what your circumstances are, to, give a call, reach out, and learn what the possibilities are.
Absolutely. And just to piggyback on that, most definitely. I mean, we're always the phone call, text message, reach out on Messenger. Let's grab a cup of coffee, have some discussion. It's no pressure. You're not
Mhm.
going to get pressure from either of us to make any quick decisions. We just want to get you the information that you need so you can make a sound decision and make a wise decision. And so definitely reach out to us if you have any questions. Thank you so much, everyone, for tuning in. This was our first of many to come, and we're super excited about it. Thanks for tuning in, and we will catch you at the next one. Thank you.
All right. Thanks, Leo. Bye, everybody.
Thank you.